ETC is almost $77 per coin, and this is our key level that I've been talking about in almost every single video. So I do want to touch on that, as well as go over a couple articles. I'm not going to read the whole articles or anything, but I do want to point out a couple key things, from regulation concerns to leverage, 100 to 1 leverage people are saying in the crypto markets, and much more. The hash rate, everything you guys need to know for today's ETC update. But before we get into that, the only thing that I do ask is that you tap, tickle, touch, or smash the like button, but make it turn blue for me, as well as subscribe to the channel if you are not already. Now, I have a link down below for my buy and sell alerts. That is in the Patreon, so if you want to be a part of that, check it out down below, link in the description, as well as get $5 free in whatever stock that you choose using the link for public. 2-minute sign up. You can even link a debit card and you get your stock instantly. I've been getting Tesla, so let me know down below in the comment section what you guys chose. With that, let's get into it. Now, just taking a brief look at what Ethereum Classic has done today. At 12:20 a.m. they were $72, almost $73. Ran all the way up about $10 to $82.59, and then came crashing back down another over $12 by 6:30, and then rallied back up to 80, and then we're currently at $76.09. It is moving around a lot right now, and this is going to be very volatile. So if you can't stand to watch that, don't listen to me just because I'm holding it. You have to come to your own conclusions and be able to sit through these swings, or you will lose a lot of money. Now, getting into one of the articles that did catch my eye, it says Bitcoin traders using up to 100 to 1 leverage are driving the wild swings in cryptocurrencies. And if you guys know anything about margin, basically what they are saying here, they're using a lot of margin. Well, margin, if you're on Robinhood, Webull, any other platform, they will only let you do a 1-to-1 ratio. You can only borrow up to 100% of your portfolio. So the fact you can borrow up to 100 times your portfolio value in certain brokerages, that is absolutely insane. It says Bitcoin traders liquidated about roughly 12 billion in levered positions last week. Goes on to say, selling budgets more selling until you come to an equilibrium on leverage in the system. There is some interesting things in this article. Let me see. This is a pretty long article though. It says if prices go down, they have to pay out the brokerage firm back in what's known as a margin call. As part of that, there's often a set price that triggers selling in order to make sure traders can pay back the exchange. Brian Kelly, CEO of BKCM, pointed to firms in Asia such as BitMEX allowing 100 to 1 leverage for cryptocurrency trades. Robinhood does not allow traders to use margin for cryptocurrency, and Coinbase only allows it for professional traders. Now, I will also link this down below in the description because there's quite a few interesting videos that are in this article. Like I said, it's a pretty long article. It says, in quotes, you get this crowd factor. Everybody's liquidation price tends to be somewhat near everyone else's. When you hit that, all of these automatic sell orders come in and the price just cascades down, Kelly told CNBC. And that has a lot to do with the algorithm trading that is going on in stocks and crypto. Basically, everything is driven by algorithm trading. Once you hit a certain point, everything just starts to sell until it gets to another certain point where everything starts to buy. That's essentially what algorithm trading is. Says Bitcoin traders liquidated roughly 12 billion in leveraged positions last week as the price of cryptocurrency spiraled. According to BYBT.com, this mass exodus wiped out about 800,000 crypto accounts. So hopefully yours was not one of those. Crypto accounts are getting absolutely slaughtered. It goes on to say selling budgets more selling until you come to an, okay, I already read that. This selling begins to compound as leveraged positions are liquidated because they can't meet those margin requirements. And like Robinhood doesn't let you buy crypto on margin. So if you're buying crypto on margin, it doesn't go against your margin position outstanding, because I have margin in Robinhood, but I also have crypto on Robinhood. So it's not, factored in the same way. You can't leverage crypto on brokerages like Robinhood. Goes on to say, delevered markets get crushed. This is what Mark Cuban says, and we all know he is a huge crypto advocate. He invests in a lot of cryptos, was I think one of the first companies to actually start accepting Dogecoin as payments for the Mavericks, and that is the basketball team that he owns. Says, In quotes, delevered markets get crushed. Doesn't matter what the asset is. Stocks, crypto, debt, houses, they bring forced liquidations and lower prices. But crypto has the same problem that high frequency traders bring to stocks. Front running is legal as gas fees introduce latency that can be gamed. Basically saying nothing is going on too crazy here. It happens in every single market. And essentially, when you do get these mass liquidations, it sets a higher bottom because a lot of people that were using bad debt to trade crypto, they now have to sell out of their positions. And a lot of new people that can't afford to take on positions like that, maybe with less leverage, come in, buy those positions and help to stabilize the price. Especially after we fell 50%, I really don't see too much of a fall going into the future unless something crazy does happen with crypto. Now, let's go into this other article I seen was pretty interesting. So China, they don't like the decentralized mainstream cryptos, but this company, China's BSN Builder, urges developers to look beyond cryptocurrency. And basically throughout this whole article, this is a pretty long article as well, this BSN has been developing different blockchains for all kinds of uses in China. So China just doesn't like mainstream cryptos. And somebody actually pointed this out. Well, that's the main point of this article, but somebody else actually did point this out, that actually China banning cryptos is actually a very good thing. And that might sound really, really weird, but the trading fraternity, that is his main channel, that is who basically pointed this out to everybody that was on the live stream today. He said that a lot of these companies that China has banned, they all have done very, very well, and you would have wanted to be investors in these companies. And I figured this was good to bring to you guys, because just because they're talking about banning cryptos, and they haven't officially banned cryptos yet, just transacting with cryptos, so kind of, but you can still mine cryptos, if that makes any sense in China. Hopefully that makes some sense to you guys. But look at this. The number one: Google, YouTube, Facebook, Wikipedia, Reddit, Microsoft, Netflix, Zoom, Blogspot, Yahoo, Bing, Instagram, Twitch, Twitter, Tumblr, Pinterest, Amazon, just the list goes on and on and on. And these are pretty much all good companies you would have wanted to invest in. So it seems like when China does ban these companies, they actually do very, very well outside of China. I think that is a main reason why crypto is bouncing up so hard today, that people are starting to realize it doesn't matter what China does. The more the United States becomes comfortable in saying, oh, we're just going to tax crypto, that is a very bullish thing for crypto. So I don't think this is going to be a 90% sell-off or anything like that, or we're going into an extended bear market just because of the recent headlines around China. China does not matter in the crypto field. This was another very interesting article that did come out today as well, and we're only going to briefly talk about this. It says White House reviews gaps in cryptocurrency rules as Bitcoin swings widely. Biden administration discusses cryptocurrency guardrails that still allow investors to Dogecoin to their heart's content. It does say that the Biden administration, lawmakers, and central bankers are wrestling with fresh challenges posed by cryptocurrency, conferring in numerous meetings amid recent volatility in digital assets. It does go on to say in this paragraph that they have not met with key people, like principal level officials such as Treasury Secretary Janet Yellen, and she has basically said that it's not a risk to the overall financial system, that cryptos have been being very volatile lately. It says right here, though, this is very important, administration officials are studying potential gaps in oversight related to the crypto market, such as whether it can be used to finance illicit or terrorist activities, the people said. They have also discussed whether some protections are needed for average retail investors purchasing cryptocurrency. The White House and the Treasury Department are also publicly backing a new plan to target cryptocurrency as part of a broader effort to address tax avoidance. And that's the part we already knew about, but we did not know about the fact that they're looking into trying to regulate what the retail investor like you and me can invest in as far as cryptocurrencies. And just to be quite frank here, nobody needs help with their investments. That's not the government's role. It shouldn't be the government's role. We are all adults here. Like I have said, if you watch any YouTube videos, this is going to go down 90% or it's going to 10x in value. I think that is a well-known established fact. Can't take the risk. Don't invest in this. That is a simple fact, and I really wish the government would stay out of it, if you ask me myself. Leave us to ETC, HODL, leave us alone. That's basically what I'm trying to say here. But I don't think anything too significant will come out of this. If it does, maybe you'll have to answer more questions on Webull or Robinhood when you go to sign up, right? Maybe they'll make it harder in that aspect. But I really don't think anything is going to come out of this. But take a look at this. As far as volume for different cryptos, obviously Bitcoin had the most volume today so far at 59.5 billion in volume for the last 24 hours. Ethereum is number 2, as it usually is. And then guess what is number 3? Ethereum Classic. Well, technically Tether, but I mean, I don't know what you really consider that. It's just at $1. It's like a Bitcoin peg. So Ethereum Classic is number 3 in volume today at 11.671 billion. So this is obviously a good sign, and we're going to look at the hash rate to see how many people are still continuously mining Ethereum Classic, because that is a good gauge to see the enthusiasm around a cryptocurrency. As far as the hash rate, we can see this is actively climbing right now. Since we did hit our low yesterday, I'll pull this out to the week to make it a little easier to see. At 24, no, this updates quite often. Yesterday was at about 22.57 TH/S, and even as low as 24.34 as of today, but we are steadily uptrending pretty consistently over the past couple of days since we did hit that low of 22.72 TH/S, and that was yesterday. We've been climbing ever since. So once this data does continuously update, that'll be very, very good, even breaking out past this range we have been in. And like I said, this is basically just showing you how many people are mining Ethereum Classic, and that just makes the blockchain safer. And it does show you how many, miners do think Ethereum Classic is going to continue to go higher. Now, this is a main factor that I am watching right now. If the hash rate really does start to fall, then you're going to see a lack of confidence for Ethereum Classic start to show, like we have seen before the run up. And if you guys follow this channel, you have seen me talk about this hash rate quite often. And we were at about 12, 13 TH/S on any given day. And then once we did start to rally, obviously more people started to mine it, and we pretty much tripled or almost tripled to a high of 33.34 TH/S, and we have been really sitting at about the 25 to 26 TH/S range for quite a while, but we are starting to uptick and uptrend. Well, about, higher than we were May 23rd. So that is actually good. And pretty much the whole time we were falling, the hash rate stayed the same. So nobody jumped ship just because Ethereum Classic fell 75% at one point. 75-80% from its highs we've seen when everybody did start to mine it. Everybody kept mining it. So that's a very positive indicator as to what people think Ethereum Classic's price will do going ahead into the future. Now, take a look at how accurate this technical analysis has been. I put on this trend line at about $52, going up to about 77 is where I've been saying that we are going to get some resistance. But if we can cross that $77 mark and go up to about $90, $95, 77 looks to be a great support level. And that is exactly what is happening right now. As we speak, we are at $78. We are really fighting around this range. We are up 5% right now. But if we can form a bottom here and then leg up, like I said, to about $95, 77 will be a solid support level. Now, the bullish indicators are flashing as well. The 50-day moving average is currently at $64.22. The 200-day moving average is currently at $69.27. So if the 50-day moving average crosses above the 200-day moving average, this will be another bullish indicator for a lot of crypto traders out there that'll basically say, hey, this is going a lot higher. This is where you should initiate a position. And for us to do that, we'll probably have to go up to about the $80 mark, and this 50-day moving average should cross the 200-day moving average. Now, let's put on the RSI and let's put on the MACD and see how that is looking as well. Now, for some reason, it is not on here, so I do have to pull it up right now. And it's actually weird. The signal line is going over the CCC line, which is indicating a bearish pattern. So we're really going to have to see how this does play out, because it's not always 100% correct. And this did happen once we started to sell off from about $82. So I guess it does make a little sense, but it should start to curl up here shortly. If not, this is something that I would watch pretty closely every single time this divergence happens from bullish to bearish patterns, and we could see a little bit of outflows in ETC as well. But every single time this happens, you either, go bullish or you go bearish. So if you know what that means, you know what that means. I don't want to elaborate on that too much as of right now, but the RSI does look pretty good. We were in overbought territory around $83, came down, and then, fell to at about 60.51. So that's not quite in the middle. That's still on the high end, but this is good that the RSI is not curling down as we are consolidating and hopefully looking to make a push to the upside. So if the RSI does start to come down and this gap does start to widen between the signal line and the CCC line, that could indicate another downtrend, but it pretty much looks neutral. MACD looks slightly bearish, but the RSI does look bullish. So that is that, and basically the key levels to watch is the $77 level. If you were looking to make a short-term trade on this, if we can hold this level, probably going in through the rest of the day and through the rest of the night, and depending what these other indicators start to say, that could be a very good spot to enter a position in ETC. Now, if you're averaged in over 100, 140, something like that, this is a good time to average down, especially if you're in at about the 140. You're down 50% on your position as of right now. So you'll get a pretty good average down on it depending how much money you do put in, but I do want to keep averaging down the more that I can. Now, as far as my portfolio and ETC, it says it is currently $76.89 on the Robinhood. My average cost is $99.53. So if we do continue to go down, that's when I will look to continue to average down. It's all about the percentage you are down and how much money you are going to throw into this when you do average down. So like I said, if you are averaged in really high on this, probably a good time to average down. This is not advice. Do whatever you want. If you're not highly convicted on this like I am, you're definitely going to lose money and you're going to FOMO and you're going to sell out, and that's just bad. FOMO will kill your account. Selling out will make you FOMO. So the two go hand in hand. Just don't do that. Either sell it and don't look at the chart ever again, don't look at ETC ever again, or just hold it and try not to let your emotions get the best of you. That is going to wrap up the video. If you liked the video or got anything useful out of it, hit that like button for me, as well as subscribe to the channel, and make sure to comment down below what is your price target for ETC and how long do you plan to hold this. Let me know. I need to know this information. And if you want my buy and sell alerts, that is in the Patreon link down below, as well as $5 free at least, or up to $70, somewhere usually in between $8 and $12 of free stock in whatever stock that you want. Check that out, link down below in the description. That is for public. I will see you guys later. Be prepared, never scared. Until next time, take care.